Your loved ones, they mean everything to you. You provide for their everyday needs and their future dreams. But what if something were to happen to you? No one wants to think about dying. But have you ever wondered how your loved ones would manage financially? Wouldn't you like to know? You can with life insurance. Having life insurance means that if you were to die, your loved ones would receive money that would allow them to pay funeral costs, monthly bills and living expenses, any outstanding debt, including medical bills, credit cards, and mortgage, and allow them to finance future needs like your children's education or your spouse's retirement. Unfortunately, many people don't get life insurance because they believe it's too expensive. For most people, that's just not true. For example, a healthy 30-year-old can get $250,000 of coverage for around $12 a month. That's just three lattes. But how do you know how much coverage you need? A general rule of thumb is 8 to 10 times your salary. But this may be too much or too little for you, as everyone's situation is unique. To find your number, take a few minutes to use the online Life Happens Life Insurance Needs Calculator. It will give you a general idea of how much you need. Then reach out to an insurance agent. It's free. They can help you get the right amount and right type of life insurance. You've always provided for your loved ones. Don't wait till that's no longer possible. Life happens. That's why there's life insurance. Learn more today.
Okay, so let me see, stop presenting. There we go. All right, so probably one of the most common questions that I get when I'm meeting with somebody that has life insurance is, how much should I purchase for my family and to protect my family? And again, there is a method of determining that. I'm not going to go over that this morning, but if you want to sit down and talk about that, we can certainly do that. There are many different types of life insurance. The most common is term insurance. And term insurance is something that you purchase that is covering a specific period of time. So if you have a business and you want, and maybe a partnership with someone and you want to protect that business, you can purchase a policy, buy-sell. You can create a buy-sell agreement. You refer people out to Mark Holmes for that. They can determine the value of the business. Then they can purchase life insurance on each partner, for example, to cover should one of the partners die and they want to buy out that partner. And maybe they, say, I want insurance for 10 years or 20 years, or the maximum is typically 30 years on most term policies. There's a few companies that will go to 35 years. But those are the terms that are most commonly purchased. The thing about term insurance, though, most term insurance is never utilized. In other words, the claims that are paid out on term insurance are about 3%. So life insurance, in that case, the insurance company wins in term insurance. However, because they're keeping your money, right? But they are also providing you a service of protection, which is why it's called life insurance. If you want to cover a mortgage, make sure if something happens to you and you're concerned about college expenses or debt and those kinds of things, protecting your spouse from loss of income, then term insurance may be the solution for you because it's cost effective. That's why people buy term insurance. It's less expensive, but it will not take you to the end of your life. If you are interested in something that has permanent death benefit or permanent coverage, such as whole life or universal life, those products can take you to the end of your life. They're a lot more expensive. They create a cash value typically that, for example, myself, when I became an insurance broker, I decided to take in this case, my IRA money, and I put it in a life insurance policy because it became, as the cash value grows, I can borrow against it. I can create permanent income from it later. And I have a death benefit as well should I die prematurely. So at the time it was, do I put it in an IRA where I'm going to be taxed fully on that money if something should happen to me, or do I put it in a life insurance product that gives me a tax-free death benefit, but ultimately I want to live. And by the time I'm, say, 70, my cash value has grown to a point where I can borrow against it, create lifetime income. And that was my goal, because I couldn't do both at the time years ago. And at some point, when you have one of these permanent policies, if you buy it at a younger age, is of course cheaper. That makes sense. The younger you are, the less expensive it is. So if you're going to get into a policy that's permanent, you want to do it as soon as you can. Now, there's people that'll fund a policy and they'll do a 7-pay, or they'll put. We've had people put in $100,000 all at once, and then they'll pay $25,000 a year for 5 years and never pay another penny. And the goal to that, again, is to create as much cash value. We look at we lower the death benefit as much as possible, so that it doesn't become a MEC, or where it becomes a taxable life insurance policy. And so life insurance, it's actually a very unique opportunity to create a lot of things for your family. In some instances, people can create wealth with them. Maybe if you don't have a lot of money, but you want to protect your spouse, you can buy a policy for X amount of dollars, and if something happens to you, they'd end up far better than if you lived. And that can create wealth for your heirs. I mean, it's sad but true. It can do that for a small amount of money. Life insurance, like I said, when you're looking, you have to completely look at your picture financially. Some people buy life insurance just to cover their taxes when they die. They don't want their family to have to sell off their assets. They may have a lot of assets, and they're saying the best way to protect my family from doing that is to buy a life insurance policy where the tax benefit's tax-free. Then I can distribute that money to pay taxes on all those properties or assets that they do have. Probably most important for the average person is just providing for my family. If I died and I'm the breadwinner of the family, I want to make sure that my wife and my children are provided for. That's the primary person that we meet with. But there's, again, many, many uses for life insurance. Another great example is our daughter and her husband she got her master's, he got his bachelor's, and they had a considerable debt from college, just like most people today. We sat down with them. We recommended they purchase a policy. It's called a banking policy. They put money into the policy up front, then they borrow that money out. They pay off all their debt that has high interest on it, because that policy is earning, 4%?
Yeah, roughly.
It's earning about 4%, and they're paying off credit card debts of 15 or 16 or 17%. They're paying off school debt, So when you have a sizable amount of debt, it's a way to capture your money, have protection, and pay off this debt. So we have a plan for them in place now where they're going to be out of debt quickly. They know what to do. They're young people. These are sophisticated tools that help people that you're not going to see just out there, because somebody has to sit down with you and explain how they work, because you've got to think it through, and you can't buy something you don't understand. So the point is, we got to sit down with people, explain how it works, determine what your goals are and how we can best help you so that your family is protected, you achieve your goals, and that you won't be left thinking, what happened here? I didn't plan for this. So anyway, I'm excited about what we do, because when we walk away from meeting with people, I always feel that because we're a broker and I have the flexibility to go into the marketplace and see what is the newest, hottest, best product today. I'm not married to New York Life. I'm not married to any other carrier, AIG. I'm not married to any of those carriers. I'm really looking at what is best for you. One of my favorite products happens to be a product that has living benefits. And I offer this to most people, and most people buy it because it's a little more expensive, but it gives living benefits. And living benefits are things like if you should have cancer, heart attack, stroke, permanent disability, you can't do 2 daily living activities, which is a trigger for long-term care. This particular policy can come in and you can access money out of the policy. And we've actually had this policy. And when my husband had an incident, we were able to get money out of the policy. I know it works. I've had a number of clients that have had to use it. And it's what I call, it's consumer friendly. In fact, I just sold 2 policies of that in the last 2 weeks. It's a great policy for people that want protection, but want living benefits and have some flexibility. Ultimately, the death benefit is what most people want. But again, if I can give them an added service and benefit with this kind of policy, and you need it, and your family, if you're out of commission for a year with treatment of cancer or heart attack or whatever, and you say, I need access to some cash to pay my mortgage because I can't work for a year to recover, this policy can be the greatest blessing to a family. So I'm a strong advocate for that. I think for the few pennies more a month you might pay to get something like this, it's of great value to people. And again, I myself own all of these things that I'm talking about. I own personally. I don't just sell them. I believe in them. I own them for me. It's part of my financial plan. So again, life insurance is so important. It can be expensive, but it doesn't have to be. And we can adjust based on, for another example, I had a client, I thought she was going to get a better rating, and she did not for various reasons. So we sat down, had a conversation, and we can adjust the amount of insurance based on the affordability. You might need or want 1.5 million, but your budget might only allow you to buy $500,000. So, but it's good to know what you really need versus what you can afford, and to know at least you're doing something and not neglecting the responsibility that is there. So if you care about your family, please, I'm here to assist you in any way if I can be of help to you. You're not obligated to buy anything from me. And again, if you just want to have a review, they recommend at least every 5 years you should take a look at what you have to reassess. Is it too much? Is it not enough? Because life changes. Some of the significant changes to think about is if you get married, you should reevaluate. If you purchase a home, if you start a family, you change jobs, start a business, you're planning for your estate, and you acquire more properties, more assets. These are all things that are triggers that may require or might suggest a review for you. So